Hello everybody, Justin here. I hope you guys are doing well, having a great day or a great night. And first things first, before we jump to the charts, don't forget to hit the like button, share with your friends, subscribe. We are exchanging my knowledge for your time. Your time is precious as well. And let's jump into the charts. Just a second, please. Okay, so here we had a very interesting move here since my last video. And okay, so before taking a look on the last action, I'm going to show you something here about tops, bottoms, and full cycles. Okay, I don't like to use this word, but I believe is the best one for this scenario here. So first things first, I want you to take a look on this structure. You believe back in the day what I said. That's our top, no news, the Battle of Midway, the bottom structure, which I believe was not set yet, okay? But it looks like so far this was the bottom for Zilliqa. And another way to look at this behavior here is this one right here. So can you guys see how similar the structures are? The one from the top and the one from the bottom? I don't believe this was the best draw. Yes. So very similar structure in general. For these guys here, it was somewhat, I highlighted the structure, somewhat bear flag. But okay, let's take a look on volume and OBV as well. So we have raging volume here, which is amazing news for later bullish continuation. Now OBV, just a second. Okay, so let me see here, just a second. Okay, so we don't have bullish divergence. We don't have any divergence here at all. But let's take a look on the weekly chart for more clues. Okay, so here we have bullish divergence here. First, let's take a look on volume. Okay, so raging volume, increasing volume from the beginning, which is nice. And so for the bullish divergence, for instance, on buyer's activity, we had a double bottom here, and in price we had a new low. Okay, I believe this move here was the one that I can mention, driving by this event, and probably we wouldn't end up with this kind of move here if it wasn't for that event, which I highlighted in the day that delayed what was going to happen. Okay, so it's nice to see this divergence. So the divergence is in the bottom, okay, not in the top yet. It's somewhat very close, which is also great. As you guys can see, let me draw another line here. Okay, so bullish divergence, same range for the buyer's pressure, but price made a lower high. Okay, so that's another bullish divergence. Just a second. Okay, so here for the weekly, what do we have here? So we reached the previous Midway structure, which I call the Battle of Midway. That's a transition from bottoms and tops and bottoms. And also the very key thing here is this level. Okay, so actually the proper level here is not the first one that I draw. actually is this one right here. Okay, it's 12 6. Well, basically it's the 12 level, 0 0 12. Okay, so have this level in mind. And the other one that we are looking for, probably in the middle as well. Just a second. So it's 0 21. I don't care about the others. Yes, so these two levels here were the ones that set the middle structure. And let me see here. Okay, so let's presume, just for the sake of this example, the bulls were able to close above this level here. Okay, this will be amazing for later bullish continuation. Okay, and why? Because this level here will give us a odds for it can be around this level here. Okay, it doesn't have to be, we don't add another lines, but as you guys can see, we can have some odds for a inverted head and shoulders, which is a bottom reversal structure. Okay, and the target for this scenario here, if it plays out, is going to be around this level here. I don't believe it's going to make 100% of the target, but instead something around 60 and 70%, which will be, if I'm not wrong, let me just check the numbers here for a second. Hold your heads just a second. Yes, so just a second, because I don't need the other numbers. Yes, so as you guys can see, this is going to be another key level ahead, and as you guys can see, we already had some traction here before, and this would be a perfect scenario for also even later continuation. Okay, because here we also had just a second, please. Okay, let's go. So we have another level in between. Just one more second. Okay, so this is my between, and as you guys can see, we also had the traction here for support and also for resistance, not because it's a support or resistance level, it's a key level, let's say behind the scenes. Okay, something like that. So back in the day when I made the first video, if I'm not wrong, I called out this bad candle here. That was a bearish candle, indeed it was, but it also was a bear trap. Okay, and I highlighted the Fibonacci setup here from week to week and body to body, if I'm not wrong. Just a second, please. Okay, let's go. And then here we had 80% attack on Fibonacci, and with the bull break from this previous lower high compared with the previous one, we end up with 120 plus percent attack, and now, if I'm not wrong, we are around 141%, which is bullish. Okay, every time we break above the hundreds and beat the previous high, this is bullish. Can be I'm not saying it is, but can be a bottom reversal in motion. Okay, like I said, we still need a close above this level here. It doesn't need to stay above. It can end up in rejection. Okay, what we need is a wick above this guy here, which will give us confluence for the late bulls that lost all this track here, and they eventually will jump here, also looking for a possible inverted head and shoulders or even a cup and handle pattern. Okay, but also there are many more patterns that can play out. For example, a bull flag, which is not going to be the case, very unlikely. We also had a bull flag in the side. We also have a possible rising wedge that will give us the confluence we need to beat this guy here. And so we have around 8 or 9 patterns that can play out here. Okay, I'm not going to make any guess here, because as you guys can see, there is a lot of scenarios that can play out. And also what we are looking for here, it's the bulls have to maintain this area. Okay, they must. Otherwise, if we end up in rejection, we can go below and probably closing above this previous level here. Okay, but very likely to end up with a higher low. Okay, so this is what we have to keep an eyes on for now. And as you guys can see here, I'm going to make the same draw that I made back in the day for Fibonacci, and as you guys can see, we end up rejected at 780, which was bearish, but the bulls made their way back right after, which was bear trap. Okay, and now let's take a closer look for the 3 days. Okay, so here on the 3 days we have bullish divergence as well, as you guys can see, a lower high with a higher high on buyer's volume, which means the bulls is still buy. Okay, so let me see if we can find any structure here. So if we were trying to use some Elliott theory here, this would be overdue and also parabolic, which is not great, but it's not bad as well. And as you guys can see, the bulls were able to close above this key level here, that is 0012. And right now what we need is continuation. Okay, it can be below and above. Don't have any problem with that. Okay, because if we do such move here, we will be chasing the 50% price, the average price from this level here, which can give us a bull flag as well. Okay, and some people make things like this. I'm going to show you what some people do, and I'm going to tell you why it is not accurate. Okay, some people use the pole from the previous low to the previous high, and they do something like this to make targets. Okay, so this is not valid. That's not how price action takes place. Okay, there is a math behind each structure, and all the micro patterns inside the one that lead us for this structure before the bull break or the bear break, if this was a bear flag. Okay, so let's take a quick look on the daily. Okay, so what we have here, it's indecision candles. Okay, the buyers and the sellers are like trying to figure out what they are going to do, and it looks like there is no sellers interested on this level, which can be great news for the buyers. Okay, nothing special here for volume. Let's take a look here. Okay, so here we had so it's not a red flag yet, okay, but we had a decrease in volume from the seller side and also decrease in volume from the buyer side, but this is natural to happen now, okay, because like we just talked about, this is a moment of indecision, okay, so trying to figure out what one side and the other side is going to do, okay. And now let's take a look on the 4 hours, which is a big deal. Just 1 second, please. Okay, let's go. So just a second, just a recap, because I really don't want to miss anything here at all. So as you guys can see, we are developing bullish patterns inside this range here. Okay, so for people who like to use tapes and channels, they already saw this, but one of the reasons I don't like tapes is because they create anxiety. Okay, so and most of times they are not valid, they are speculative in nature. Okay, so again, we have an ascending pattern, okay, which comprehends multiple structures, and the thing here is, so let's take a recap here quick. Inverted head and shoulders, bull break, descending bullish pattern, continuation above the average price, and right now what we have here, let's take a look if we are ready or not. Let me see here, where is the trigger point? Just 1 second. Okay, let's go for this one right here. I don't want to make any mistake, I don't want to be wrong here. I like straight numbers. I'm going to clean the last line so you guys will have a better sight. Okay, so here we had this is a symmetrical bullish triangle. Okay, this means we have room for bullish continuation, and we have some steam and some firepower here for the bulls compared with the seller's firepower, which is good news. And what we be maybe looking here for the next hours is this. Okay, what I'm going to do from now on, it's a speculation, and I'm going to use the dotted line so you have a better understanding. So presuming this guy here stop it for now, okay, no more bullish activity from here, what we will look for is another small retrace here just to catch up to price again before the bull break, and the target for this structure here is going to be around just 1 second, not possible to make 21 in my humble opinion, not now. It's going to be just a second. So it's going to be around this level here, 15 cents, okay, which will lead us to the edge of this channel here, okay, or the tape. whatever you like. And I believe this is it. I believe I'm not missing anything here at all. So again, the straight lines are valid, okay, properly in place. The dotted lines are for speculation, okay. And so, well, I believe this is all for now. Let's take a zoom here. Okay, so as you guys can see, this is a sending move, which is try to think like this. We are going up and we are giving a little bit of the action for the bears, okay? And at some point, let's for the sake of this example, let's say we make it to the 15 and then we go and then go again to 21, okay? Which will be awesome. But this whole structure will have to pay off the bears. There is no other way for continuation, okay? And the average price here for a payoff, believe or not, is going to be inside this level here, inside the 12 again, okay? But it is true that we can close above the 50%. That will be on the golden mini, okay? So it's looking great. A lot of bullish activity. It's nice to see crypto behaving like this again. And so guys, this one here is due to play out before, let me see, the worst case scenario, June 1st, okay, maybe June 2nd, the worst case scenario for a long boring action here before the bull break, okay. But again, so far we don't have zero clues for any bear break here. It doesn't mean it can happen, but we don't have odds for that, okay. So I believe this is it for now, guys. I don't believe I missed anything here at all. Let me take a look on the chat. Future boy, hello my friend, how are you doing? Nice to see you here again. David Rolf, thanks for the TA. You are welcome, my friend. So guys, I believe this info was helpful. I hope it can improve the way you read it, the way you trade it, and well, don't forget to like, hit the like button, share and subscribe, okay? Let's keep exchanging, and I'm going to see you guys soon. Thank you.